Hello everyone, welcome to Best of Us Investors. We as a tribe are gathering in Discord server, where we share Carrie's portfolio, Carrie's buy and sells in real time, and we have live discussions every Mondays before the market opens and right after the market closes on Fridays in the Discord server. The stock analysis team also analyzes stocks based on the votes from the tribe members, so hope to see you all in the Discord where the link is listed in the description to join. We would also appreciate if you can subscribe and hit the like button, which will help our stock analysis videos. Now let's get started with our stock for this week. Today we will be talking about Immersion Corporation. The ticker symbol is IMMR, which is a company that creates, designs, develops, and licenses haptic technologies that allow people to use their sense of touch to engage with and experience various digital products in North America, Europe, and Asia, and was founded in 1993 and is based in San Francisco, California. When we say haptic technology, this deals with the touch and its feedback that we could actually feel, such as little vibrations on smartphones, making it feel like there are actual buttons on a touch screen. In gaming, it's not just a vibration, but feeling the difference between walking on water, walking in the woods, and etc. based on the activity going on in the game. Immersion is the company that created the haptic feedback technology in the Sony PlayStation 5 DualSense controller, which offers more than subtle vibrations to simulate the real-world sensation. PS5 achieved the highest launch month sales for a video game console in the US history during the pandemic, shipping 7.8 million PS5 consoles as of March 2021. What makes it more amazing for me personally is that Immersion has a licensing deal with Sony where Immersion will earn a royalty on every controller that's sold. Also, another thing that was really interesting for me is that the executive vice president of gaming at Microsoft, Phil Spencer, he has been praising the DualSense console several times publicly, where it may suggest that they are looking into some of its features for the Xbox controller. Immersion also is collaborating with Striker VR, which is a manufacturer and developer of cutting-edge force feedback peripherals for virtual reality gaming. Through this collaboration, the two companies will bring a new haptic experience to Striker VR's virtual reality gaming platform, where you can experience everything from the power of a floor shaking speaker to the crack of a baseball bat to the pull of a fishing line, which I think is really cool. If you go to the Immersion website under gaming, it seems like they are also working with the GTR Simulator RS30 Ultra wheel, which features force feedback in the steering wheel as well as the paddle system to create a realistic racing experience for Xbox Series X, Xbox Series S, Xbox One, and PC platform. It does seem like they have a collaboration, but for some reason I couldn't find any news articles on this other than on the Immersion website. So, if I'm wrong, please correct me. There's a rumor that Netflix is planning to expand into gaming in 2022 and may partner with Sony to being their games to service, which would also be an amazing revenue for Immersion if this actually happens. Immersion has amazing patents for the haptic technology, where it includes over 3,200 issued or pending patents. And there has been a number of big tech companies being sued for their patent infringement. In 2003, Microsoft agreed to pay $35 million to settle the joystick patent suit. In 2004, the jury awarded Immersion $82 million as a reasonable royalty for infringement of its patents in Sony Dual Shock controllers. In 2012, Google settled patent lawsuit from Immersion over Motorola use of haptic feedback. And in 2016, Immersion claimed that Apple has infringed their patents in the iPhone 6 series and Apple Watch, where they actually reached a global settlement and license agreements with Apple in 2018. Haptic technology can be adopted in so many areas, including game consoles, as we just talked about, in cars, where Tesla is also working on a new high-tech steering wheel with touch screens and haptic feedbacks. We have haptic headphones, robotics, mobile devices, and virtual reality with haptic body suits, where Pornhub has actually invested in haptic suits. They're saying bye-bye marriage. Based on the report from the Global Market Insights, the haptic technology market exceeded 7 billion in 2019 and is posed to grow at a compounding annual growth rate of over 7% between 2020 and 2026. If you look at the price of immersion, it has been between $7 and $15 for more than a decade now. But to me, I think this technology is finally starting to take off with the verge of virtual reality and 5G, making it possible for adoptions in so many industries. So I'm invested in immersion and I want to be in this company before it takes off. This is a long-term position for me personally.
This is to the extent of my knowledge that Immersion is the only public company focused fully on haptic technology. The few competitors that they have in the haptic technology are private businesses. And just to have something to compare Immersion to, I put Corsair Gaming in the table to see how they compare. They're both computer and technology companies, even though Corsair isn't really that focused on the haptic. Corsair being, of course, the more established of the two. I wanted to see how Immersion would compare to a more established company in a somewhat similar field. With the price to sales, Immersion's is way higher than Corsair's. But if you look at the price to earnings, they're quite similar, telling you that Immersion seems to make profits far more easily than Corsair. Still, Immersion depends on royalties, so this can vary, of course. Immersion has a better price to book ratio. Both companies have identical price to research ratios. However, I still think Immersion's R&D expenses are way too low. They've been much higher in the past, so this low R&D expenditure might signify that they're currently not that busy with new projects, which could mean bad news. It doesn't have to though. Say the lowering costs in R&D do correlate to a lack of new projects, and that the lack of new projects correlates to fewer partnerships with companies for their haptic technology. That would mean that new royalties and the new money stream is further away than we'd want to see. Operating ratio looks all right, but they get their money from royalties. So honestly, this ratio could bounce around. It's bound to vary with future projects. Same with their revenue stream. On the topic of future projects, the need for haptic technology is bound to increase exponentially as its use will in the future be needed in various fields. Seeing how Immersion is currently one of the few companies focused on haptic technology, and looking at a broad list of patents and how many people they managed to sue regarding those patents, and looking at the coming growth of this field, this might promise a steady flow of royalties. But for now, the stock still has potential of going down. So I'd put it on your watch list and try to find a couple nice buying opportunities, as I think that this stock may do very well in the future. A coming need for haptic technology in, for example, the gaming field is just around the corner. And that's why I think Immersion will grow in the coming years.
So regarding their partnerships, they partnered with Faurecia, which is one of the world's leading automotive technology companies. They will provide them access to Immersion's haptic technologies. Immersion claims to be in one of every 3 cars Faurecia provides. And Faurecia is like the #1 vehicle interiors technology company. The agreement enables Faurecia to develop advanced interactive haptic user interfaces with the latest innovations from Immersion. They also partnered with Bosch. This was a couple of years ago in 2018. In the agreement, Bosch gains access to Immersion's haptic technology for their automotive solutions. So they're kind of doing the same thing that Faurecia is doing. So IMMR is basically entering the market for haptic technology and interiors of cars. And if you're familiar with Fisker, ticker symbol FSR, they don't have a product yet, but in 2022, they plan to make an electric car with like completely haptic technology in the interior. So I think this work that they're putting towards in the automotive companies for haptic technology interior is pretty huge. Drew mentioned this before, but they partnered with Sony in the new PlayStation 5 and the dual sense controller on the PS5. Most of the technology is from IMMR. They also partnered with Alpine, which is a Japanese company that produces electronic devices like switches, sensors, touchpads, and things like that. In the partnerships, Alp is gaining access to Immersion's haptic active sensing technology in their touch feedback devices for their switches, sensors, touchpads, whatever else they're making, and while getting paid off royalties. If you look at the cons, first thing I saw was that their revenue has been declining. In 2018, it was around 110 million. 2019, it was 35 million. 2020 was 30 million, and recently it's 31 million. So they have a pretty steady declining revenue. The other thing is that they also have declining total assets. So in 2018, they're around 145 million assets. In 2019, they had 124 million, and then they had 96 million in 2020. So they do have declining revenue and declining total assets. And they're also sitting below the 300 simple moving average, the 250 and 21 simple moving averages, which is a con for me. And there's also been pretty heavy selling volume on the stock recently. So that does indicate people are looking to sell the stock more. And yeah, that's basically it.
So let's look under the hood for Immersion Corporation. It's been around for quite a while. In 2021, as Q1, it had revenues for $7.15 million, EPS trailing 12 months of 45 cents. It just came out with a press release of preliminary earnings for Q2 that they're looking at $10.5 to $11 million of revenues with net income of $5 to $5.5 million revenues. So that's looking up from Q1 to Q2. Their estimates going forward in 2021, they're looking at 8.86 million with earnings per share of 0.46. In 2022, 43.70 million with earnings of 0.59, and that came from Seeking Alpha. So they're growing slightly, going in the right directions, and they do have earnings for a small company. They don't have any dividends. Market cap's only 234.6 million, so it's a small company. 131.73 million as an enterprise value. 30 million outstanding shares. Institutional ownership's about 51%. Short interest is at about 4.9%. They have cash of about 102.6 million with debt of 2.72 million. Net income margins 39.11%. So let's go ahead and look at year-over-year consolidated statement of operations. So as we're looking through, you can see revenues from 2020 to 2019, ending on the 31st, we're down about $5 million. And that came from royalty and licensing is down about $5 million, you can see. The cost of revenue was actually reduced, which looks like they did some cost cutting here. If you look at each line item, especially general and administrative expense, they went from 42 million down to 18 million. So from 2020 to 2021, their cost of revenue over expenses went from 57 million to 28 million. And that's what helped them get positive in their operating income of $2.2 million for 2020. So if you add in the tax provision benefits that you see there, their net income was actually $5.4 million. Diluted income, net income per share was up 19 cents compared to a loss of 64 cents. And then you can also see they have a reduced number of shares from 31.5 million to 28.4 million, which for me is also a positive. So the only revenue source that was up 2019 to 2020 was their per unit royalty revenue. And that went up slightly from 23 million to 24 million. Total revenue in 2021 for the first 3 months was 7.1 million. So it's up over from 6.2 million. You can see the cost of revenues have gone down with the exception of research and development, which brings us to a total cost and expenses of 4.6 million, which is reduced from 10.8 million. Net income was 2.036 million compared to a loss of 4.8 million. And basic net income per share went from negative 16 up to 7 cents per share. So again, you can look from a year ago, 31 million shares to 28 million shares. We're going in a positive direction. And again, you can go down and you can see the per unit royalty in 2021 compared to 2020 was up 5.7 million for 2021 from 4.8 million in 2020. So total revenue is up quarter over quarter. Look at the balance sheet. You see the cash and cash equivalents has gone up to 102 million from 59 million from the previous year. Total current assets 115 million, which is up from 74 million. So total assets are up, total liabilities are down, which is a good thing. Total current liabilities are 9.2 million as compared to the total current assets 115 million, which means they can pay their short-term debts. That's positive. Total stockholder equity has increased from 63 million to 105 million. And total stockholder equity is really the total assets minus the total liabilities. And we just talked about how the assets went up and the liabilities went down. Moving on to cash flow, you can see stock-based compensation. Something I look at is gone from 729,000 to 531. So that's a good thing. Net cash from operations is raised to 4.4 million from a loss of the year prior. Proceeds from an issuance of stock. You can see that it looks like the issued stock in 2021 brought in $35.9 million. Stock option plan brought in about $2.7 million. So net cash from financing activities is $38 million. It's good that you go back up that we have cash flow from operations. So we have operations, we've got some from financing. We go down, you can see that the net increase in cash and cash equivalents is $43.1 million. So the beginning period, you can see we're at 59 million and now we're at 102 million. So they have cash. Looking at the price, I think Drew brought it up, we're at $7.56 at the time of this video. 52-week spread is from $6.10 to $16.64. The market's indexes are at all-time highs. This one is trailing. You're going to get into this stock. The 50-week moving average is at 8.33, so the price is currently below the 50-week moving average. 200-week moving average is at 938, way under that also. The RSI is at 41. So you might have some opportunities here to get in if you're looking to get into this position. It's an interesting stock. I would dollar cost average if this is something you want to do, but first do your due diligence as always. It's not something that I look at. It's a smaller cap stock that I'm not really interested in, but it has a cool technology and has potential, and it's looking like, at least for the last 2 quarters, numbers are moving in the right direction.